This is the golden question. Hello, hello. Welcome to episode 13 of the Golden Question podcast. In today's episode, we're going to be asking the question, why is China buying more gold? Now, my attention is going to divert to China, but just acknowledge that it's not only China's central bank that is buying up gold, it's many other central banks and many other countries that are also buying gold, and especially these new superpowers that we're starting to see with Russia and Australia, the ECB, New Zealand, and even in Canada. So you're seeing a lot of these central banks, even in Southern America, with Brazil and Mexico, that are starting to acquire more gold. But I'm going to focus on China because they're buying gold in a much larger proportion than any other country. And this is mainly because I wanted to clarify something and correct the point that I've made with the previous episode with Ethan R. And in that episode, I said that if China dumps its treasuries onto the market, so if it sells all its treasuries, it doesn't want it, both from the central bank perspective and as well from the individual perspective, from individual investors, if China dumps all its treasuries, that interest rates will go down. And in fact, that's not true. It's actually the complete opposite. Interest rates will rise if China dumps its treasuries, because if these treasuries are worthless, the interest rates on these treasuries are going to have to rise to compensate for that loss of value. And because they're more riskier, because their likelihood of the United States, the issuer of the treasuries, will go bust is also increased, and therefore the interest rate has to reflect that, so to reflect the risk associated with that. So interest rates would rise. So right there, it gives you a new perspective on the landscape that we're envisioning, and especially the relationships between the U.S. and China. So the U.S. knows that China has a lot of treasuries, right? So it has a lot of treasuries, but it also knows that China is buying more gold. Now, the U.S. must accommodate that. It does not want China to think that the treasuries are worthless and sell them and then let all these countries sell their treasuries, because interest rates will rise. The United States does not want interest rates to rise. They want interest rates low. They want to continue this inflation train, whatever you want to call it. They want to continue this inflation-bound economy. So they don't want the Chinese or any other country to sell their treasury. Let's focus on the Chinese. They don't want China selling its treasury. So they want to give them value, but not too much value to the point where China now starts thinking that the treasuries are gaining a lot of value, and so they start actually selling their gold. And once everybody starts selling gold, the price of gold goes down, and the theory is that because the value of gold is going down, the value of the dollar is going up. And obviously that's going to conflict with the United States inflation target and their inflation agenda. So the U.S. has to strike this balance where it wants to give enough value to their treasuries so that China doesn't just dump them and think that they're completely worthless, but it also doesn't want to give the treasuries too much value so that China can keep buying up more gold, and so it can keep keep this inflation train going and keep the dollar inflated and many other central banks obviously are in with this, but the United States is the main one because, again, we're still under this world reserve currency. So the question is, does China know that the treasuries are worthless? Because from looking at it now, you might say, well, China, obviously, if they're sophisticated enough to understand all this and to continue buying up gold so that theoretically they can have a sort of 1-to-1 ratio from their gold to their treasuries, they have to have an idea that the treasuries are somewhat worthless. But then you might ask, why do they still have such a large reserve, and why aren't they just dumping it now if they know it's worthless? And it's mainly because there's this uh, and this is worldwide, sentiment that the United States has a strong economy. That although these treasuries are worthless, right, they're just a piece of paper, a bunch of IOU dollars, although these, and again, you can even look at it from the perspective of the dollars, although these dollars are worthless, it's backed up by a strong economy. And unfortunately, that is a false sentiment to follow or to consider because the United States does not have a strong economy. And that is the only illusion that the entire world and all these foreign central banks are thinking. I mean, right? If you're a central bank, or you can even look at it from the perspective of just a local bank, a local foreign bank that now wants to lend out money, what currency am I going to lend it out in? I can lend it out in my own currency, but obviously that's dependent on my own risks in my own country, the political risks, especially the political risks. So why would I want to do that? Let me just lend out a currency that's valuable, right? If I lend out my own country's currency, it may be valuable now, but when it's time for my borrower to pay me back, it might not be valuable. So a lot of lenders around the world, they don't want to touch these currencies. They have this illusion that the dollar, although intrinsically it's worthless, it's just like any other fiat currency, it's semi backed up by this strong economy. The strong economy, the strong nation that we know is going to last today, it's going to last tomorrow. The likelihood of India's economy collapsing is much more likely and much more likely to happen sooner than is the United States. So there's the sentiment that if I'm a central bank or if I'm just a foreign bank, that I'm lending out these, I'm going to choose to lend out these dollars because it's the safest asset, both currently so I can attract borrowers and in the future when it's time for the borrowers to pay me back. And if I'm an individual foreign bank and I'm thinking, wait a second, I might not be able to get my money back. What can I do? I can just go to my central bank and my central bank can, in a way, give me back my dollars. Now, how does the central bank get the dollars? The central bank has these swap lines with the Federal Reserve, in which the Federal Reserve will buy that central bank's currency in exchange for dollars. And the central bank, from the central bank perspective, from the foreign central bank's perspective, this is a great thing because now if a business in that country or a bank in that country needs dollars to pay off some dollar denominated debt, and we'll get back to that, it can just call up the Fed. I'll give you some of my currency, you give me some of your dollars, and then that central bank could then bail out, right, the bank or the business in that foreign country. And back to the dollar denominated debt, it's these lenders now that if they had to choose what currency to lend, they're going to lend in dollars because they think that it's the stable currency. They think that it's again backed by this strong economy. And from the borrower's perspective, they want to borrow money. They want to borrow from using a currency that will have value now. Now, from the borrower's perspective, it doesn't really matter if the currency will have value in the future. They actually wish that it doesn't have value in the future. But they are borrowing money now, and they want to do things with those dollars, so they want something that's valuable now, and they're going to be inclined to look to borrow in dollars. Also, most of the lenders might in their region might only be willing to lend in dollars, especially in these countries that have really low value currencies. If they want to go borrow some money, I mean, the lenders are only going to be lending out in dollars in some scenarios. So you have this worldwide sentiment that the dollar, although yes, intrinsically it's just like any other currency, it might go down, it's worthless, I can't do anything with it in a desert island, but it's currently backed, and in the future it will be backed by a strong economy. But that's what everybody's getting false. They don't understand the internal flaws of the U.S. economy. And back to China and the U.S. and China relations, you could apply this same narrative to their relationship as well, where the Chinese know that yes, these treasuries are intrinsically valueless. They're just like their own currency that the Chinese central bank prints up, or any other central bank prints up, but it's backed by this strong economy. And because everybody else thinks that same way, it continues this. You can call it a pyramid scheme or a Ponzi scheme, because right when a bubble first starts up, right when the scheme first starts up, everybody actually thinks this valueless thing has value, right? So back when the United States first issued this dollar, and they broke away from the gold standard, they initially thought that this dollar has value, and it's backed by the strong U.S. economy. Despite it not being backed by gold, it has value. But again, we all know that the dollar from 1973 to today is the same dollar. It's the same type of paper. It's the same exact dollar, the same characteristics. But back then, people initially thought that it has value. So that's where the bubble starts. Everybody starts thinking this thing has value. Soon, one person says, wait a second, maybe this dollar isn't actually valuable. However, I've already acquired so much of it that I really don't want it to be valueless. I know it's valueless, but I've already acquired so much that I pray to God that other people don't think as I do, so that they can buy these dollars off me, so that they can get these bags off my hands, so to speak. And it reminds me of, like, you could just think of it, a kid collecting baseball cards. He works his whole life, right? Every dollar he earns, he buys some baseball cards. He acquires all these baseball cards. His friends are into it. They're discussing it. They're trading. He uses his baseball cards to get snacks in school and other things that he might want. So his whole group of friends are think that these baseball cards are valuable. But one night, the kid's staring in the ceiling in his bed, and he says, maybe these baseball cards aren't as valuable as I thought they would be. Or, wait a second, this is something that I've been trading goods for, this piece of card that really doesn't do anything. It just has a printed picture that I could just easily print from my own computer if I had the right machine. But he's collected so much of it, and he's traded so much of his he worked so hard for it, and he traded maybe some of his own goods for these cards, that he acknowledges that they're worthless, but he doesn't want his friends to think that they're worthless, just so that in the interim he can get them off his hands. So this is the narrative that it starts off with one person, and then it starts spreading. More and more people start to think, again, back to the real world scenario, more and more people start to think that these dollars are intrinsically valueless, but they don't want others to think that they're valueless, because as long as others think that they have value, they'll continue to either still acquire them or trade them at a premium. But unfortunately, when the bubble nears, when everybody has that same opinion, right? When everybody has that same opinion that these things aren't as valuable as they claim they are, and I hope that other people don't think like me, sooner or later, there aren't as many people who think that they're valuable, and then that's when the bubble collapses. And you could apply this to any other bubble. So right now, in this current scenario, we're starting to hit the edge of the line where there aren't as many people or banks left that actually think these dollars have value, who actually think that these dollars could be representative of a strong economy. And so this is where it gets dangerous. And this is where eventually the dollar will collapse because of this. If there are other scenarios where the dollar could collapse, but the fundamental is that the dollar collapses because it has no value. I mean, there are other scenarios where it still has value, but it still collapses. But fundamentally, you could argue that the dollar collapses. It will collapse. Why? Because it won't have as much value. So again, let me go back to the Chinese and U.S. relations, and that is the Chinese have already acquired so many treasuries. In the past, they've acquired a lot of treasuries, and so they have a lot of treasuries now. But they don't want to just dump them into the market because then they'll be worthless. The interest rates will rise, and they won't get anything for their treasuries. So all this hard work that they've spent acquiring these treasuries will be blown into dust. It won't mean anything. So they hope that these treasuries have value, but they know intrinsically that they don't. So they acquire gold so that this bank can leverage its treasury position. And ideally, they probably want like a 1-to-1 ratio from treasuries to gold, or even exceed that ratio. I'm not sure what the ratio is. But China, that could be there. Now, there are other incentives for China to acquire gold, maybe to just have a higher stance, a political stance, to make some, to have a political voice, especially in a scenario like the Bretton Woods agreement, in which China didn't really have a voice because it didn't. It just finished World War II, and it didn't have as strong of a gold position. But China could be just acquiring gold just so that they can have a stronger stance on the table in the event that the dollar collapses. But it's also part being fueled by China trying to create a 1-to-1 ratio between its gold position and its treasury position, because it has so many treasuries that could or could not go bust, or may not go bust. So they would rather safely hedge that by buying gold. So, and the United States now has to accommodate that. The United States knows that, I think. The United States knows that China is trying to buy gold so that they can keep this 1-to-1 ratio with their treasuries. So how does the United States accommodate that? Well, it treads this line where it wants to give these treasuries enough value so that China doesn't just dump them, and obviously the United States does not want to see interest rates go through the roof, but it doesn't want to completely give them total value in which the dollar now gains value, and then we have this we experience deflation, which obviously the United States does not want. So believe it or not, the United States does not want the dollar to retain value. It wants inflation, and it acknowledges that through inflation, the dollar will inherently lose value. But as long as it's controlled, as long as it's slowly losing value, that's what they want. And through this losing value, paradoxically, the government grows, right? Because the dollar loses value, all the citizens' dollars lose value, and the government is slowly, in a way, indirectly taxing us. So as long as this happens controllably, it's okay, right? This theory that the United States wants the dollar to be worthless to grow indefinitely is false, because if the dollar is worthless, then obviously you'll have a massive uprising, and interest rates will start to go up as all these countries start dumping their dollars, and now the U.S. is forced to tighten. But it also does not want to give value to the dollar, because then we'll see we'll experience deflation, and all these inflation goals of the U.S. Are now undermined. So the U.S. has to walk this thin line where we want the dollar to lose value, but as long as it loses it controllably. And we see this through the price of gold, right? The price of gold slowly, naturally increases. and that's what the U.S. wants. It means that the dollar is slowly losing value. But every time the gold price skyrockets, that's an alarming rate. The dollar is losing value too much, and this could shock the system. So the U.S. must then, and we could spend another couple of episodes talking about how the U.S. and other central banks manipulate the gold market in their favor. But when you see these strong skyrocket movements in gold, it's an alarming sign for the Fed, knowing that, and the Treasury knowing that the dollar is losing too much value. We have to control this down. We have to start manipulating the market to send the price of gold a little bit lower, so that gold can go back and the dollar can go back on their normal trajectory. So again, the normal path is for the dollar and gold, for the dollar to lose value slowly, and we see this reflected in the price of gold increasing slowly. So to conclude, China is buying gold to create a ratio or to hedge against its treasury holdings. And a lot of other countries are doing this also. And now you may ask, why, instead of acquiring gold to hedge against their treasury holdings, why don't they just sell their treasury holdings? Well, the reason is they won't get anything for them if the very fact that they're selling them is going to show that they're worthless, so they won't get anything for them. A bunch of other countries will start selling them, and from the U.S.'s perspective, they don't want for these other nations to sell their treasuries. That'll send interest rates through the roof, and obviously the United States won't become as dominant as it wants if all these other countries start selling their treasuries. And so the United States still wants to have a presence in the world by issuing all these dollars, letting these dollars saturate well in the global market, and through that, obviously, they gain political power. So in order to accommodate that, the U.S. and, again, as I said before, many other central banks are thinking like this also falsely. The United States can, in ways, manipulate the gold to controllably gain higher in price, to give the illusion that these other countries are hedging against their treasuries in a controllable fashion, in which they don't sell their treasuries, but at the same time they don't think that they're 100% worth something, because then the United States inflation goals will be crushed. So the United States wants inflation, but in order to have inflation, you need to slowly do it. Inflation, by definition, is the value of something decreasing slowly, right? Inflation is not the value of something crashing, because then there is no ceiling to which the value can go. It goes to infinity, right? If the dollar goes to zero, can you put a price on gold in terms of dollars? No, the price is infinity. I mean, nobody will trade their gold for dollars if the dollar goes to zero. So inflation needs to be controlled, and that is the goal for the United States, to create in a controllable fashion, an inflation movement in which the dollar slowly loses value. Through that, over time, the United States can gain political power, as we've seen since, and the government can grow in size, and that's evident as we've seen since the 70s, and even going back to the 30s. And so the United States does not want the dollar/treasuries to have all this value, but at the same time, they don't want them to have no value. So they need to run they need to be on this slim line of balancing the two opposing forces. So hopefully I haven't stretched that. I think I'm starting to repeat myself, but I'm trying to make it clear to the listeners here why the dollar is still used, why other countries are still acquiring dollars, why they're still holding dollars, and why they aren't selling their dollars. And dollars are obviously, when I refer to dollars, I'm referring to all U.S. government assets, treasuries and other government bonds. So hopefully that was clear enough. If you guys have any questions, leave them in the comments section below on my YouTube channel. And if you're listening, you can again remember to subscribe to my YouTube channel. I have actual video from that I'm going to be starting to do. Once I get a webcam, I'll actually make these podcasts on video as well. So stay tuned for that, and I hope you guys stay safe.